While traditional moving averages will catch this eventually, you'll see the 9 and the other ones catch up with this, but we already saw that they sold and it's already about to push down. So that's the advantage of the early entry confirmation system. And so we use that to our advantage and we use these order blocks to know, okay, SPY is tanking down right now, but we have buyers sitting. As soon as it starts crossing over this 664 level, we're running back into money. So you can play your puts, and as it's dropping and it starts breaking these levels, but as it starts approaching 664 and it starts getting in this range, we know that they're going to start, exiting out of their put position. So now, in a situation where price will push through this really aggressively, is if the VIX, this little VIX thing. So I'm not gonna get too far into VIX, but this thing right here, when it pushes up, it causes uh it causes index funds and volatility index funds to sell automatically. So they'll start dumping stocks in the S&P 500 because the volatility is high. And so when volatility is high, they have to be responsible with the money and trim positions and things like that, take some risk off the table, start playing more defensive things. So they're going to dump everything. And that type of volatility, like if VIX pops up and you see this VIX go above 20, getting to like 24 and stuff like that, it'll cut right through all that and just keep pushing down. But if it's just, pushing up like 7%, 8%, it's going to respect these order blocks. All right. And so does anybody on here have any questions about just the confirmation system or the moving average, or want me to retouch on anything that I covered yesterday? You can unmute yourself and ask. Okay, so now let's touch back on going down to lower time frames and looking at the confirmation system from a lower time frame perspective. All right, so I'm going to go down to the 15-minute time frame on SPY, and you can see even on these smaller time frames with me drawing this, I drew this zone on that WTMA, or the Wolf Trend Moving Average arc, and you can see that price broke down, went back into the zone, and fell out of it. But when you're a day trader, when you're a person that buys shares, you want to be on like that 1 week time frame, the 1 month time frame, the 1 day time frame, and you want to see price coming down into these type of zones on the higher time frames, and you want to have a confirmation system. You want to see some things happen to show you that the billionaires are reacting to this zone. They're actually defending it. So you don't see price just come down to a zone and say, okay, I'm going to just jump all in with all my money. On a higher time frame, if you're a person that's buying shares and you're actually investing, and you see Nvidia or Netflix and stuff like that that's pulled back on the higher time frames coming to these zones, you want to see like what we use this inverse arc, this arc system. We want to see the price, that thing scoop under the price and show and crossover, showing us that smart money is defending and actively buying Netflix or buying Nvidia. And so we want to see them buy first, and then we'll follow them, right? And then you just buy, buy at a discount, have a system to how you buy. If you're a day trader, one system that I use with day trading is if you're jumping into a stock to try to see if it's weak or if it's strong, a quick way of doing that is evaluating the pre-market high and low. So let's cover that for people that day trade, or just if you're already in trading you day trade, you want to use the pre-market high and low. So here in pre-market, if you at the bottom of a trading view chart, first of all, if you never used trading view before, these numbers on this row that's going up vertically, you see how my mouse turned to those two arrows. You can click and hold and drag that up or down to adjust your chart vertically, right? And at the bottom where it has the time and the dates, if you click and hold, you can stretch the chart from left or right to expand it out. All right. So your charts won't be all jumbled up. And if you put your mouse on the chart and roll a little mouse thing, it does the same thing. And if you click and hold on the chart, you can pick the entire chart up. Just in case people that have never used TradingView, right?